Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TRADEWEB MARKETS INC quarterly report. TRADEWEB Markets Inc. provides a wide range of businesses and services to various clients worldwide. These include electronic marketplaces for trading rates, credit, money markets, and equities, pre-trade data and analytics, trade execution and processing, post-trade data, analytics and reporting services, flexible order and trading systems for institutional investors, DealerWeb platform, electronic, voice, and hybrid platforms for dealers and financial institutions, TRADEWeb Direct platform, trading solutions for financial advisory firms, and traders services to various client sectors including plus institutional clients, asset managers, hedge funds, plus wholesale clients, banks, dealers, proprietary trading firms, plus retail clients, retail brokerage and financial advisory firms. The stock price of TRADEWEB Markets Inc. has dropped by over -16.67% in the past year due to a combination of factors. Mixed earnings reports, including a revenue miss in Q3 2025, have contributed to cautious investor sentiment. Analyst downgrades and price target reductions from several financial firms, citing concerns about growth outlook and market share, have also weighed on the stock. Specifically, Rothschild & Co. Redburn's downgrade and multiple price target cuts from UBS, Goldman Sachs, Morgan Stanley, Citigroup, BofA, and Raymond James reflected a cautious sentiment among analysts regarding TRADEWEB's future prospects. The repeated downgrades and price target adjustments culminated in the stock hitting a 52-week low of $105.23 in early October 2025. Net income and profit margins experienced significant growth. The company's net income has seen a substantial increase, rising by $80,326 in 2025 compared to the previous year, representing a 61.7% growth. This significant jump is also reflected in the profit margins, with operating income margin increasing from 38.7% to 40.1%, and net income margin rising from 32.5% to 36.3%. The primary driver behind this growth is revenue expansion, which grew by 21.3% in 2025. Specifically, transaction fees and commissions saw a notable increase of 22.4%, while subscription fees rose by 14.4%. Additionally, other revenue experienced a substantial surge of 48.6%. As a result, the net income margin has increased from 29.1% to 41.3%, indicating improved profitability for the company. The company is generating a significant amount of positive operating cash flow, with net cash provided by operating activities increasing from $615,716 in 2024 to $811,697 in 2025. This indicates that the company's operations are generating sufficient funds to cover its expenses and investments, resulting in a substantial increase in operating cash flow over the past year. The company's debt level and interest expenses have undergone significant changes over the years. Initially, there was a notable increase in debt from $869,108 to $1,907,922, representing a substantial growth of 119%, page 7 to page 27. However, this trend is not consistent across all periods, as seen on page 97, where a new unsecured revolving credit facility of $500 million led to an increase in debt. Regarding interest expenses, the data shows mixed results. While there are instances of significant decreases, such as -63.9%, page 70 and page 82, other periods exhibit increases or minimal changes. For example, on page 84, interest expenses increased by $2,168, -58.5% decrease. Overall, it appears that the company's debt level has increased significantly, but its interest expenses have experienced fluctuations with both decreases and increases observed across different periods. The company's financial performance varied across different segments and regions in 2025. On a positive note, institutional revenue saw a significant increase from $266,681 to $317,148, while corporate's revenue also rose from $17,193 to $23,243. Transaction fees and commissions performed well. However, retail revenue declined from $35,770 to $38,025, indicating poor performance in this segment. Wholesale revenue remained relatively stable, but did not experience any growth. Unfortunately, no specific data was provided for geographic regions or Europe's performance, making it difficult to assess their contributions to the company's overall financials. Management is optimistic about the company's outlook, driven by increased demand for platforms and solutions due to regulatory changes. The company plans to expand into new markets through strategic acquisitions, focusing on innovation and adaptability to respond quickly to emerging trends. Revenue growth is expected from subscription fees, transaction fees, and commissions, driven by higher trading volumes and acquisition of new assets. Investments in convertible notes and digital assets will also contribute to revenue growth. The company has a history of distributing value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company paid out $76,788 in 2025, which translates to $0.12 per share. This is an increase from the $63,927 paid out in 2024. The payment of dividends indicates that the company has generated sufficient profits to reward its shareholders. Additionally, the company has also engaged in share buybacks. Although the exact amount for 2025 is not specified, it is mentioned as a bought back on page 65. In contrast, the company bought back $24,391 worth of shares in 2024 and $24.4 million worth of shares in the same year. Overall, the company's decision to pay dividends and buy back shares suggests that its management believes in returning value to shareholders while also maintaining a strong financial position. That concludes the financial summary for TRADEWEB MARKETS INC. Feel free to comment below, and I will be happy to answer them when possible.